radio for a really great future. We're talking real money.
Because real money drives your real life. It drives it either up or, lack of it, down. And I think you probably prefer the up. But as we discovered in a previous hour, you might want to get a second opinion on almost everything you do when it comes to investing, particularly. And this is I don't mean to blow our horn, but folks, this is probably the best place, not just in the Seattle area, but in the country, to get a second opinion that you can be pretty darn confident is in your best interest, not ours, not some annuity salesman's. Oh my gosh, I did some looking during the break. I always love doing looking, and we had a call about an annuity sales guy in Spokane. Both he and his wife were fined for selling annuities without proper licensing and without meeting with clients. And that's all they are. They're just annuity salespeople. Oh, what is it with these annuity salespeople? They are, I'm telling you, annuity salespeople, just generally speaking, there are always exceptions, but they are the lowest form of financial services life. If somebody's trying to sell you an annuity, please call me. Please call me. 855-935-TALK, 855-935-8255. You can call that number 24 hours a day, 7 days a week, but because it's the holiday season, if you call today and you ask a question, we will send you a special gift, a copy of Financial Physics written by this guy sitting here, Don McDonald. I'm Don. Tom, my co-host, is lounging by the beach in beautiful Hawaii. A much-deserved vacation because he works his tail off. But he'll be back with us next week on Christmas Eve. 855 Christmas Eve, yeah, 22nd, Christmas Eve. 855-935-8255, and waiting patiently on the line, Jim, welcome to Talking Real Money. Jim? I don't even hear the noisy phone line stuff. Jim, are you there? Is he there? Am I there? Jim? I guess he's not. Should we go to Dan then? Dan, are you there? Maybe something's broken?
Dan's here.
Oh, good, Dan. I'm so glad you're there. I was getting concerned nobody was around. I felt deserted. What's up, Dan?
So I have a union pension that should be hopefully solid in the future, but I'm starting to think about doing something on my own, and I was just about ready to walk in and give J.P. Morgan a check and let them play with it, and I was just wondering what you thought about that.
Yeah, hold off for a minute, would you? Hold off.
Sure.
One, they're one of the major brokerage firms, and the major brokerage firms, generally speaking, do not have a 100% fiduciary responsibility to their clients. They can act as a fiduciary. They're what's called duly registered. They can act as a fiduciary at times, and then at other times they can do what is just merely suitable for you. And I don't think merely suitable is suitable for most people, because merely suitable means, it's okay, but it isn't the best thing. We could do better, but we don't want to because we make more money. Can you tell me what kinds of investments, what have you done with them prior to handing them this check, which you haven't done yet? Yay. What have the interactions been like? Have they talked about your future, your wants, your needs?
Yeah, we did. I went in and sat down with them and talked for about an hour and asked them some questions, and they explained what they did and that sort of thing.
What did they say they did?
Just kind of looked at when you wanted to retire, how aggressive do you want to be with your money? What do you want to put it into? And
yeah, did they do any risk tolerance work with you? Give you like a test?
They did.
Good. What did they say your risk tolerance was? How tolerant for risk were you?
I was towards the higher end.
Okay. And what did then, I bet did they suggest any products, or are you just going to give them the money and then they're just going to do whatever?
No, they didn't really suggest any specific products. They showed me, I believe it was a prospectus on a couple of different funds.
Give me a name.
Sorry, I don't recall.
Oh, darn it. All right, hang on with me a minute, Dan. We're going to talk more about this, and I'll tell you what the reality is of working with a company like that, both the good and the bad, after we take care of some other business. Don't go away.
Tom and Don are talking real money.
You've heard that about 99% of all financial advisors are not always required to act in your best interest. You've probably been pitched financial products by all manner of friends and relatives, and the investing you have done is probably a hodgepodge of ill-fitting pieces that are doing little to provide the financial security you need. If you're looking for a 100% pure fiduciary, and we'll put that in writing, low-cost, fee-only advisor who always puts you first, give Vestory a call at 800-386-3004. That's 800-386-3004, or visit us online at Vestory, VESTORY.com.
For your real life and real future, Tom and Don are talking real money.
Once again, the number to call is 855-935-TALK, 855-935-8255. A free copy of Financial Physics awaits if you ask a question on the air, because it's ho, 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 the holiday season. And we're talking with Dan. Dan did the right thing. He called before he put money in the account. Now, I'm not going to tell him he shouldn't put money in the account, but Dan, before you put money in the account, I have a couple of things I'd like to suggest. One, ask them to put down in writing what they would do as an investment, what their investment plan for you would be, with the names of the vehicles in which you'll be investing and the costs of those. What is the upfront commission? What are the annual fees? Is there a 12B1 charge? All of those important things that people do not ask before you give them the money, because once the money's there, it becomes a lot easier to succumb to their pressure to do something. Okay? Can you do that?
Yeah.
Please do that. Also, at our website, we have an advisor interview form that I think everybody, before you go meet with any advisor, it is advisor neutral. It's a front and back page. It's a PDF. You can print it, download it and print it, and take it in and say, please fill this out. And if anybody refuses to fill it out, then there's something they're hiding. There is something they're hiding. Now, here's my guess. When you get that plan, since they showed you a prospectus, you will be put into mutual funds. That is typical. That is fine. But the mutual funds they will suggest to you, I am 99% sure, will either be A shares, B shares, or C shares. If they are A shares, you will be charged a 5.5 to 5.75% commission up front. That will be taken out of your wealth and deposited in their pocket. Or if it's a B share, you will be paying up to about 2% per year in fees. And if it's a C share, same thing, except those fees go on forever. In a B share, they go away after about 7 years, the higher fee. So check that out. See what they're going to do. You might want to print that form, print that advisor interview form, and say, before I do this, this is a very critical business relationship. It's nothing personal. I am not, you're a nice person. I respect you, but this is a very important business relationship we're entering into for thousands of dollars. Could mean my future, the difference between a great future and a lousy future. So would you fill this out? And then please put in writing what you plan to do with my money before I deposit anything. There you go.
Okay.
Do that, and I think you'll be so much happier, because you'll probably find that this is not where you want to be. And then I would suggest you go back to Talking Real Money, and there's a button right above that advisor interview form that says Find an Investment Advisor. Because, again, I am not saying that my firm is the be-all and end-all. We're a good firm, but there are others that are just as good out there, and you should shop around. This is a decision. This is not buying a television. This is even bigger than buying a car. And people do far more research to buy a car than they do for this. So I would advise, please, more research.
Okay, well, thank you.
You're very welcome. Thanks so much for the call. I really appreciate it. Call first. Call before you go to the office. Because this should not be an impulse buy. It is not like buying a pack of gum or a Kit Kat bar at the grocery store. checkout. This is your life we're talking about, and it shouldn't be entered into lightly. I know they're nice people. They may be a great friend, a family member, but, folks, you need to put business on this. You need to understand it's a business relationship. You need to categorize this as, you say it's business, not pleasure. I like you. I think you're a nice person, but please tell me, are you my fiduciary always? What are you charging? What kind of investing do you plan to do? How risky is that investing? What is the worst case scenario? What might I lose based on history? And then interview another advisor and another advisor, because even if it takes you a month to get through those interviews, it's a month well spent, because you're likely going to end up understanding what you're getting into better, fewer future problems, and hopefully a lot more money in your pocket. Don't react rashly. Thank you. And speaking of people reacting rashly, I meant to get to this earlier, but I'm going to get to it now. 1 year ago, tomorrow, for those of you listening to the show live, yes, tomorrow is December 16th. Today is December 15th. 1 year ago tomorrow, something extraordinary happened. A wacky little computer code thing soared to $19,282. That computer code thingy, or cryptocurrency, is called Bitcoin. And 1 year ago, a Bitcoin was, according to the secondary market for Bitcoin, I think Bitcoin is plural and singular, was valued at $19,282. Everybody had been saying for years, all of the crypto fiends were saying, hey, these things are safe. It's not tied to the whims of a government. It's not as dangerous as stocks. This is the way to protect your wealth. Put it in Bitcoin. It'll protect your wealth. Then they started saying, well, maybe it won't just protect your wealth. Maybe you're going to get rich off of these things. There were people who were actually assigning a Lambo value to their Bitcoin. A Lambo value. You know what that means? How soon until I have enough money to buy a Lamborghini? That's when you know something's wacky. And I hate to say I told you so, and I'm not telling you I'm prescient by any means, but I can smell a bubble from 1,000 miles away, particularly one that's backed by absolutely nothing. Say it again. Absolutely nothing. It's backed by nothing. What is a cryptocurrency backed by? Yeah, they say Tether's backed by fiat currencies, but wait a minute. Weren't you trying to get away from fiat currencies? Like the dollar and the pound and the euro? But a Bitcoin, what's it worth? Well, glad you asked, because today, in fact, I'm going to look at the latest price as of right now, because it's always trading, those crazy Bitcoiners. Let me see here now. Yes, this is the latest trade I've got on it from 11 a.m. this morning, $3,156. That's a loss of in excess of 80%. I think it's about 84%, somewhere around there. I have to do the math, but I think that's about right. Do you know the worst 12 months for the S&P 500? The worst 12 months in history for the S&P 500 was in 2008 to 2009, and it was a loss of 43%. Bitcoin safe? Not on a bet.
Tom and Don are talking real money.
I just recently created a new and massively improved interactive edition of Financial Physics on iBooks, but I don't want to leave out those without an Apple device, although no other platform offers their interactivity. I have, however, created a free static PDF version of Financial Physics with an F that you can get right now at TalkingRealMoney.com. That's TalkingRealMoney.com.
your guides to a really great financial future. Tom and Don are talking real money.
And yes, if you're a crypto crazy and you want to debate that with me, give me a call at 855-935-TALK, because I'd love to hear why you still support cryptocurrencies. It's crazy. 855-935-TALK is the number. Get a free copy of Financial Physics because it's the holiday season and we're feeling generous. I'm Don McDonald. Tom's on vacation and Jim is back. We're having problems with his line, but we got him back. Hi, Jim. Welcome to Talking Real Money.
Good afternoon and happy holidays.
Happy holidays. What's up?
Well, a couple of, I hope they're fun questions. But first, the last couple calls I've been listening were really interesting. When you talk about cryptocurrencies, isn't that a little bit like snake oil from the 19th century? Or so I've got a bridge and I'll sell you all my interest in this bridge from the 1950s.
It's a lot. Actually, it's a lot more. I think it's a lot more like tulip bulbs. No, it's not, because at least with a tulip bulb, you got a tulip. You got a tulip out of a tulip bulb.
Well, maybe, unless it was just a paper tulip, right?
Right, that's true. If you were playing fiat tulip bulbs. I'm sorry.
Yeah, I guess and the other question is if someone, just an observation for the gentleman who sounded like he was like my age and probably in my situation, someone who would hire a financial planner without interviewing them, isn't that a little bit like letting a doctor operate on you without having, doesn't every doctor tell you what they're going to do ahead of time?
Well, yeah, but they should, but here's the thing. These people are so adept. They really are, Jim. They're so good at pulling the wool over your eyes. That would be like you going into the doctor and you saying, well, doctor, what are you going to do to me? You've got to trust me. I am a doctor. I am going to do what's best for you. Do you trust me? I'm going to do and you're going, yeah, okay, doc, I trust you. You're a nice guy. You gotta hold their feet to the fire, make them tell you what they're doing and how much it's costing.
Okay. So now I'll get to my question. They were just really fun. I heard. So
I appreciate those observations.
Assume that I want to own some Berkshire Hathaway, okay? Assume some portion of my investments I want in that. Would you advise me to hold the Berkshire Hathaway shares in my regular investment account or in a tax-deferred account like an IRA, and why?
Okay, well, one, I'd want to know why you'd want to own Berkshire Hathaway when it's kind of been for a long period of time, underperforming the broader market.
Okay.
But okay, if you want to own it, if I had a choice, Berkshire Hathaway does have a lot of, it does pay a decent dividend. Well, it depends on let's see, what's the dividend now in Berkshire?
No, it pays no dividend. It's all capital.
Yeah, I was looking at Berkshire A, Berkshire B. That's right. It's all capital gains. They retain dividends. Okay. I'm double checking my numbers here, make sure I'm right. That's Class B. I want to look at A. Okay. Here's my thinking. Capital gains are those that aren't distributed are retained. And Berkshire, I'm just looking at A, they retain a lot of capital gains. So when you sell it, you will pay capital gains at the capital gains rate, which is lower than the income rate. So I would be tempted to hold it outside of an IRA and have my higher taxed vehicles inside my IRA, but that's me. Okay. I don't think long term it's going to make a hill of beans of difference, really. A lot of people say keep your capital gain products, your riskier products in the IRA, because you're more likely to leave those alone through their volatility. Which I guess is a reasonable argument, but it really I think it more depends on the person. And from a tax standpoint, if I have taxable income and taxable dividends being distributed on a regular basis that could kick me into a higher bracket, I'd rather have those protected. So there you have it. And Jim, thanks for the call. Thanks for the observations. And the number is 855-935-TALK, 855-935-8255. But I got to tell you, I wouldn't own Berkshire Hathaway. It's almost like owning a single stock. It's not a full-fledged mutual fund. It's a very focused mutual fund. And focused mutual funds can get you into trouble when those assets don't do well.
Tom and Don are talking real money.
Just as there are basic laws that govern our physical world called physics with a PH, there are also basic rules and concepts that impact our finances and investments. I call them financial physics with an F. In fact, 8 years ago, I wrote a book about them. For years, I've wanted to create an interactive version of that book to help readers better understand the concepts. So, since it was time for an update, I turned financial physics, with an F, into a special interactive multimedia version only on iBooks. It's the only platform that allows that. Because I want everyone to have access to this information, I decided to give this version away. Yes, it's totally free. So if you have a compatible Apple device, go get your copy of the new interactive book, Financial Physics, on iBooks. It's totally free, and it's available right now in the iBooks store.
Reality radio for a really great future. We're talking real money.
And because that break was screaming at me, I didn't get a chance to really go into the particulars of this. Whether you should hold your bonds, where you should hold your bonds and your stocks. It depends. If you're going to be in a higher tax bracket in retirement, and that is a lot of folks that we talk to because you're such good savers. If you're going to be in a higher tax bracket in retirement and you have less than 10 years until you're going to start taking money out, then there's a benefit in holding your stocks in a taxable account and your bonds in the tax-deferred accounts. If you're 15 years or more, maybe 20 years away from retiring, and you think your tax bracket will be lower in retirement, that flips. Now there's a bigger advantage to having stocks in your tax-deferred accounts and bonds in your taxable account. But it's a combination of time frame and expected tax bracket almost more than anything else. There's been a lot of financial work done on this, and the advantages are like everything else. It depends. 855-935-TALK is our phone number, 855-935-8255. And Tim, you're next. Welcome to Talking Real Money.
Hey, how you doing today?
Good. How are you?
Yeah, not bad at all. Listen, I got a question for you, a good one.
Okay, I love good questions.
Investing in, I know you do. I'm looking at secured real estate investment funds, and I have some recommendations on. I know. Well, hear me out. Here are the two companies that came up with, Don. One was, I think, Cohen and Stearns, and then
Cohen and Stearns. It's a mutual fund.
Okay.
Yeah.
All
Cohen
right.
Steers. Wait a minute. I think it's Cohen and Steers.
Steers. Yeah. That's it. Yeah. And then the other one was a Vanguard Real Estate Index Fund.
Oh, well, those are different. Oh, I'm so much happier now. I thought you were getting into one of these partnership deals or, dude. Okay, then I'd go with the Vanguard, period, exclamation point. And I think that's fine. I totally think that's fine. Because you should have some real estate as a portion of your portfolio. Don't have more than like 5 or 7% of your portfolio in a REIT fund. But Vanguard's Real Estate Investment Trust Fund is no fee, no load, or small fee, no load, massively diversified, probably the best diversified of every fund out there, and is absolutely the way I would go if I had to choose. You're going to get a broader portfolio. You're going to get lower fees and expenses. That generally means higher returns over time and a lot less volatility. So in a heartbeat, I would go not with Cohen and Steers, but with the Vanguard REIT fund index. Okay?
Good. All right. Fantastic. Thanks.
Good.
For the
Go
advice.
do it. Thanks, Tim. Take care. Yeah, no brainer. You're going to have so much better diversification. 855-935-TALK is the number. And Jimmy, you're next. Welcome to the show.
Howdy.
Hey, Jimmy, what's up?
Howdy.
What can I do for you?
I have a $10,000 life insurance policy, and I want to get it out.
Okay. Well, good. I mean, it's a $10,000 policy. Does anybody need that to live on if you die?
Nope.
Well, then get rid of the darn, unless it's to pay your burial.
Cremation, $600.
Okay, there you go. Put that in an envelope, leave it for somebody. Say, hey, here's the money for my cremation. Yeah. Is there, you have a cash value of $10,000 or the death benefit is $10,000?
I believe it's the death. Benefit.
How much what's the cash value of the little thing?
That's a good question. I don't know that.
Is it a term life policy or is it a whole life policy?
Whole life.
Then it will have something, it will have some kind of a cash value. It may not be very much because the expenses on those things are out of sight. They make a lot of money off your money. But if you don't need it to pay your future expenses or for somebody to, to get along after you're gone, then take it out, get it invested somewhere, and then you can use the money as opposed to somebody else later on.
That's what I want to do.
Tom and Don are talking real money.
Keeping the podcast breaks as painless as possible is my goal. That's why I want to very quickly tell you about the only magazine I've ever heard of that is 100% real investing all the time. There's no business news, no speculative advice, and certainly no lifestyle stuff. It's called Real Investing Journal. I publish it every quarter, and you can get 2 full years for only $25 at realinvestingjournal.com. That's realinvestingjournal.com.
For your real life and real future, Tom and Don are talking real money.
Welcome back to the show. I'm Don. We're talking about your life and this really important component called money. Tom is on vacation. He'll be back with us next week, and we're going to head right back to the phones because we got lots of folks waiting. Brent, you're next. Welcome to the show.
Yeah,
Brent.
Don, thanks for taking my call.
You're welcome. What's up?
My wife has a conservancy over my mother-in-law, who's 88 years old. She's in memory care. We just sold her house in California for $650,000, and my wife parked $500,000 with Edward Jones.
Mm-hmm. Unparked.
She will inherit that money,
mm-hmm.
and it's like 1.65%.
Yeah.
And I'm just wondering, is there a better alternative to that? She just, parked it.
Right. Well, one, I would unpark it because there's just too much temptation for an Edward Jones broker to try to find something to sell you that has a big commission. It will happen. I guarantee it. Because right now they're making no money on your money, and they don't make any money unless they sell a commissioned product. So I would unpark it. Now, because this is a conservancy, and there really is no way to know. You mean your mother-in-law could live for a very long time, and her bills could be very high. Is this all the money she has?
Yes, about $650,000, and she's in memory care. It's
right, but how's her health otherwise, other than the memory problems?
It's declining. It's declining.
What's the annual cost of her care?
About $5,000 a month.
Okay. Oh, that's not bad. That's actually
that's pretty cheap for California.
That's really cheap for California. Wow. And if you're getting good care for that, you've done really well. Here's the issue, though, and I've known it to happen, that people who seem frail and are really having problems can sometimes live much longer than anyone ever expected. So let's just assume for a second that she lives another decade. It's happened. 98's not unheard of in this world anymore. That wipes out her wealth. It's gone. So you're going to have to be very, very thoughtful with the way this is invested. It doesn't mean that I would put it all in a CD and keep it there, but I would build a portfolio, and I would go out and seek a real advisor, somebody who has to act as a fiduciary, who doesn't generate commissions. And as I mentioned earlier, you can go to our website, and there's a place where you can click a button that says, find a financial advisor who works with Dimensional. These are people who follow the tenets that we believe in: 100% fiduciary, building portfolios that are right for your risk tolerance and your needs, and are massively well diversified. Because probably, and this is top of the head, probably about 80% of that portfolio should be in very, very safe, high quality, no chance of risk or loss bonds. The other 10 or 20% could be invested in equities, but it has to be massively diversified into equities. And I can guarantee you, if you stick with Edward Jones, they're going to put you in a high-cost, full commission mutual fund, probably from American or Oppenheimer, and those funds cost 5 3/4% up front. So a big chunk of your money just gets sucked into the broker's pocket. And I don't want to see you do that. So I think you need a plan. This is enough money that, and if your mother-in-law, goes in a couple of years, this is your future then. So you've got a fiduciary responsibility to her now, but then you have a responsibility to your future later. And I do not believe that Ed Jones or Merrill Lynch or Morgan Stanley or any of those commission places are the best places for your money. So I know it's probably a friend, but I take it out.
Okay, very good. Thank you.
Okay, sir. Thanks for the call. And I know it's probably a friend, but this is business. This is not friendship. This is not, it may be a person who goes to your church or in your clubs. No, it doesn't matter. This is your future, and it's too important to play around with. And why should they get a huge chunk of your money for just being nice? Jim, you're up next. Is it Jim? No, Sal, you're up next. Welcome to the show, Sal.
Hi, thanks for taking my call. I have a condo rental, and I'm deciding to sell it next year. Just focus on selling it. I was wondering what my tax implications will be on that. What I need to know about the tax.
It's a rental property, so it is not a property you live in. So you will pay capital gains on it. How long have you owned it?
Since 85, but
a long time.
I got stuck in refinancing it so many times.
Okay, you need to go back. You're going to need to go back and recreate, or if you have, I hope you have great records, everything that you've spent on that property, because you can add all of those expenses, those repairs and the things you've done over the time to your cost basis. But you will pay taxes on the difference between that adjusted cost basis and what you get for the property. But the good news is you will pay that at a capital gains rate that will be somewhere probably between 15 and 20%, as opposed to up to 36% in an income bracket. So you will be taxed, but it will be as a long-term capital gain. And you also might be able to do some tax planning to get that amount reduced. If you've got some other investments, maybe you can do some tax loss selling next year and try to offset some of those gains, but you will get taxed on it. So Sal, thanks for the call. And we've got just time to get to Jim, I think. Jim, welcome to Talking Real Money.
Yes, thank you. I just have a quick question, and I see there's a vestry in Lakewood. I've never heard you mention that. Do you have anything to do with that?
We that's us, but we didn't keep that office open. It wasn't very popular. We didn't have enough people. So we just closed that office and consolidated everything in Bellevue.
Okay. I'm sorry because there's a lot of people in the South End.
Well,
too.
here's what we do. Here's what we do now. We decided, because it was expensive and we want to keep our costs low, and we weren't utilizing it enough to make it worthwhile. So what we did is we signed up with Regus, and we have offices in Tacoma, in Olympia, in Tukwila that we use to have client meetings. So if you call us and you want to meet with one of our advisors, they'll come down to your neck of the woods to one of these offices that we use on a part-time basis.
Oh, okay, great.
It saves us a lot of money so that we can remain one of the lowest cost advisors in the country. If we kept renting that office, we would have had to raise our fees eventually. So we just decided it was better to pay when we need the office, which makes a lot of sense. So just if you want to talk to somebody, give us a call at the office or go online to vestry.com and just fill out the appointment form. And we have advisors who live on the South End. They love to meet people down there.
Great.
Okay?
Okay, thank you very much.
Jim, you're very welcome. Thanks so much for being a part of the program. I'm glad you're there, and I'm glad all of you are there. And remember, next week, Tom will be back here for our Christmas Eve show. Nothing is going to be any different than our regular shows, but it'll be on Christmas Eve. And what else do I want to mention? Thanks for all the calls. Holy cow. Lots of calls. I have to get a lot of books sent out. A lot. Next week. That's okay though, because it's just, so please read the book. It's really good for you. When you finish it, you're going to go, well, this isn't that hard. I think we can figure this out. Thanks for being a part. We'll be back in just a minute. Stick around.
Tom and Don are talking real money.
Your number one financial goal must be retirement. As we live longer, our need for a substantial retirement nest egg has grown. That's why you must have a plan. And to help you map your route to a brighter future, I created Vestory's Better Retirement Guidebook. And you can get a free PDF copy right now at retirebetterbook.com. It's truly free and there is no obligation. So get your Better Retirement Guidebook now at retirebetterbook.com, retirebetterbook.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And I want to give you a heads up. This is coming up in February, our biggest, best retire meet ever. The speakers, extraordinary, and yet we're not enlarging it at all because we like the size. It will absolutely sell out. It has every year up to now for the previous 4 years, and the fifth is going to be even bigger. So get your tickets, and they're on sale too. You get a discount. Go to TalkingRealMoney.com and order them right now for Retire Meet 2019 in Bellevue at the Meydenbauer Center. That is TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.